June 16, 2017. Look at 3 times ETNs here. Um, Most of the bear funds, of course, have been down in this area, but we're getting a grouping of some pivots down here, oversold areas. This morning, uh, what I would like to see is that for the bulls to continuation higher in the indexes, and we'll go through that in the next video. Um, for right now, as it stands, like I said, what I'd like to see is that we get a little more green this morning, and basically you're just kind of trailing something behind all of these. This is the mid cap 400, like MDY, I believe is the other for just the ETN. Um, we're down in this area again. We're getting oversold on here. So what I'd like is just have it where we open higher, maybe push, or go all day long and have something trigger on the back end here. We're still getting divergences and the issues on there. The traders held the 2400 above the 2400 level for right now. So that's basically your horizontal line. Like I said, we're working on the whole interest rate thing cycle-wise. Heat's coming through, so we'll see about crops and things of that nature in the next video. But I just want to run through these real quick. This is just 3 times ETNs. Nugget stuff, gold's above 1260, right? Yeah, we're 1255, 1256. So we're back through that area again. Thought I had a target set for 58. What did we hit for a high? We did hit a high of 58. Okay, so that was at $500. Okay, so it took another day, but that's usually how I look at stuff. Is I'm looking at what it's going to do tomorrow. Okay, so when I'm in the zone, all this comes together, and I basically say, oh, this is what it's going to do tomorrow. So I was looking for gold. It did for that $500 bounce, and it basically went, I think it was 57 and a half, so it came up 50 cents short. So you actually had to wait for the next day to pick up the $500 in gold. Here's NUG and stuff. I prefer to trade the metal versus the stocks because, as you know, even if gold does get to $1,500 an ounce, you have people who are hedging, people who aren't hedging. It's as we go by and money starts rolling out of the economy or being pulled out by the Fed, things are going to get tighter and tighter, and we're going to go into a recession. How is Amazon going to handle a recession? How are the miners and the drillers and everything gets sold off commodity-wise because they need to get stuff sold. So the natural thinking is, of course, is to lower prices, which runs people into the ground. You have your forward contracts that begin to get canceled and things of that nature. The one turning thing that we do have going on is that we do have a real estate swing. What happens is the commodities die off going into the next recession. Stocks come off, and what's left? Real estate, because interest rates will come down, and then they'll pump money back into real estate. We'll have a swing for about 4 or 5 years, and then we'll have the whole big bear market. So unless something else pops up ahead of time, so far we've had a pretty good choker on the POTUS, but cyclically and stuff, we're not in a very good situation here. There's a book called The Fourth Turning. It's kind of like how the fourth generation loses the legacy. You have the founder and then the son. Someone in Son and Company. And then his son maybe get involved, if not move on, and then the next generation you have the great great grandkid, and they're born into wealth. There's not too much modest living when, because everybody has to have the big house and all. You're just accustomed to it. Like the Gen Z kids today, they're born into, their first phone. I mean, think about this one. You're getting a phone at a certain age, 13, you're getting a phone. That's kind of oddball. One side, the child has a phone and a spinner, right? So here's your mental, I should go and hang out in the classroom for a week and I hung out in college, and I was kind of shocked at what's going on there. But it gave me a test of where they're at mentally and stuff. for the senior class here, and it was, to me, it was quite scary. But you know, for me, I need to just find that 1% of brains, right? I can't go to some of the lower rung schools or the population, you know. But it gives me, you know, it gives me an idea of where we're at going forward. Look, because for me, I look out to the, you know, start with smaller cycles, then look at bigger cycles. You know, like for me, I'm looking out, you know, a couple of years for putting seeds in the ground, a few more years for the stock market, a few more years for real estate. You know, so now all of a sudden I'm out looking out a decade. You know, it's putting a decade under your belt. They zip by quickly. Trust me on that one. You know. All right, so the setup here, like I said, nug stuff. This type of, this is basically in my eyes short covered and stuff. They will try and pump it today, but I mean, think about this one here is that, you know, the miners and stuff are going to have difficulty. So I'd rather play the metals in regards to that. Outright, yeah, I do prefer futures over everything else. TZA is going to be, I'm on you. Okay, so we did get the bump and we're coming back here. So it's one of those where you just kind of trail stuff underneath here. Basically, it's you know, here's the ADX. It turned down when it hit the bottom. We bounced around. So we get the summer. You know, the earnings. We're going to find out about earnings. The stock market looks 6 months forward. So you have things like Goldman Sachs that I think have been dropping for 4 or 5 months. So basically, each their own. I mean, we all look at indexes, and they're like, you know, they're skewed by what all the FANG stocks or whatever is. They're like a third. You know, you have your S&P 500, and we're only talking about 5 stocks that are moving at a third. So you can see the underlying weakness here of the marketplace here. But it's like everything, you know, you open up your portfolio and you go, you know, we're at a record high, and you're like, well, what happened there? But possibility here of opening up on a pivot area here. You know, you moved up and then you're pulling back here. Like I said, I'd like to see some chasing after equities in the morning, indexes to try and get the stuff to come down, so you can put a stop on here, buy stop to move you in, because you do want to go with the trend. Like I said, if you're long equities, sell June and July calls and buy August and September puts, and all that is you're basically just hedging. It's not as much as speculation. You're hedging against any type of climate in that. And I mentioned yesterday to subscribers that you know, when you sell, you have to pay the tax man. That's how Bill Clinton was able to balance the budget. The tax man was a 30% silent partner in day trading. Day trading picked up. Same type of behavior is happening in crypto coins, right? You know, get out of high school, quit your job, and trade currencies or trade coins. Same type of deal. It's just a matter of time. Usually, those kind of fads only last about 3 years. So from the 2014 high, we're into that 3-year area here where things get frothy. Kind of like you know, 1997, 98, 99. There's 3 years. 2000. There's 3 years right there when everything got kind of frothy. So I'm not poo-pooing the crypto coins, but what I've read. It's a good way of raising capital for dead projects. So Beanie Babies or Pogs. I didn't do the Pogs thing. I was too old for that, but it was the same type of deal. They just, you know, a commodity becomes a collectible, and then they speculate, and then it's same behavior. So the TZA is, you know, came up, bounced back down. These were all, you know, obviously, you know, you hear buy VIX, buy this, and it hasn't worked. Well, first off, it only works when the market goes the other direction. I'm not looking for a bear market, but I am looking for something to clean up the underlying weakness in the economy or in the equity markets here. Like I said, everything gets sold off on. In a recession, so the last thing people do is they go to cash. So here's like the Qs, right? So the Qs bounced up, came down. It didn't even get close. Gave it another shot. So we have a double top on here on the SQQQ. So what I'd like to see is somewhere in that department, that run into the NASDAQ today and see if we can get this thing to come down maybe on this median line here. Maybe a double bottom or close to it, so it'd be 28. So this would drop from like 31 and a half to, we'll just say, 28 and a half. So get some of these to drop 10%. But that's the greed side of me talking, and that was the SQs. Dust, same type of deal. You know, eventually here, gold will go down to where it's a happy place, you know, and we saw that after 1980, gold eventually dropped down 20 years later under $300. You go from, basically 900 to 300, so kind of like the SOX index I pointed out to subscribers early last week, where it dropped 90%, over its bear market from 2000 to 2009, 10-year drop. So you can see how the decades can get behind you if you're in the wrong stuff. Earlier in the week, I sent off the graph of 5 indexes, your Russell, NASDAQ, and S&P and down stuff, to show you the differences. You might be long the market, but you might be in the wrong sectors or indexes and that. So here we have the TQs coming off here. This was an attempt to break through, failed, and just precipitous drop. Got about halfway back. We've done the, so it's world famous. If it comes back through the bottom down here, then we're going to have a major slide in the Qs, which was the strongest, and back and forth between that and the Russell. The strongest usually becomes the weakest. SPXU, same type of deal here too. Sorry about the volume bars in here. Basically, looks like working on an inverted head and shoulders. But once they clear and go, you're going to have a run, and it's going to be more than 3 days. It's kind of like natty gas. You might have to stay short for 3 weeks. I wanted to see that one. Come on, you. Oil again. We did get some turn up in the products. I'm looking for some sort of bounce off the bottom down here. I was looking for 45, which basically seems like, since I think fourth quarter of 16, as a low, finally getting there. So I'm looking for some sort of bounce, but it's the same type of deal that we're pumping oil like something fierce. But it's basically just an oversold, kind of like what happened with UGAS on Thursday. Just some sort of sharp move on there. TNA, which is, I wish they didn't split this thing, but they did. This is the Russell. This is kind of like looking at a bear flag here. So the bulls are going to have to come in today and push the NASDAQ and the Russell, or any drop underneath 54.5 is going to cause problems. Russell will be a good one too, besides XIV, to buy after the next recession. And like I said, we're working into the recession. You should be able to see signs in the second half of 2018. That's usually signs begin to show up about 36 months after the Fed's first hike, and the first hike was in December of 15. So it's basically second half of next year you'll see it. And I also talking about timing that with North American drought, so we'll have crop prices take off, and it'll filter through cattle prices, ethanol, you name it, candy, on and on and on and on, where prices rise artificially through inflation. That'll allow the Fed to continue to pick up the pace of squashing the economy before we go into a recession. It might be a short-lived recession, which, typically, stock market-wise, 9 to 18 months of down, and then we get the housing blow-off, because that's where all the money will run to. If futures aren't working, futures are going to be coming off of an artificial high on, you have soybeans that go from, whatever, $8 to $10 and then to $6. No one's going to be in commodities. Only a few people can actually handle playing the short side of stuff. Everyone is naturally optimistic. I shine on the downside of things. That's when I shine. It's mostly the when the people get all jumping in my face, then I know we're nearing the end of something. I point out, I post stuff and wait for reaction, and the bigger the reaction I get, what was it this week on Stock Twits? I got a reaction for my posting on the short side of crypto coins and stuff, and of course they dumped even further. Folks were looking to buy around 25, 26, and all of a sudden you're approaching 2,000. So what did we take a third out of Ether? So that's how I knew that it was coming down. The more crap I take posting something, the larger the move. That's that's how it works in Kev's world. He posts stuff until he gets a reaction, and then he goes, "Yep, I got this one made." Because what happens is people can't handle they can't handle the truth, I guess would be the obvious one. Haha. And it gets to them. They're doing it wrong. They're conflicted in their head. It's supposed to be going up because everyone says these things are going to go to $1 million, and now they've lost a third. And so that they lash out, and so that usually tells me that there's a continuation. Right now, this morning, everybody's talking about caution on the cryptos on the way up. So in my eyes, it means there's more to go on the upside here. So we'll see how it plays out. It's an interesting play for the whole weekend here. That's what's kind of nice about the crypto market, is it stays open over the weekend, so it gives people like myself and people stuff to watch in that. So I watch wherever the interest is. If there's no interest in it, then I'm all over it. I personally am all over it. But if there's a lot of interest, then I focus there, because there's a lot of interest in there. And of course, what am I going to say? I'm going to say, look, you guys got to be cautious. And even if cryptos come back to unched on the week or whatever, that kind of thing, I still point it out. I'm like, look, I don't know how many, there's only a few times that all of a sudden you get a third drop, that you don't string a couple of those together, and then you're down 90% off the high. So just be careful in the crypto world. And like I said, a lot of these are, here's SPXL, so this is the long side one. The Dow did poke its head through and came back, so the S&P, the same type of deal. See if we can get some sort of deal to poke it through here this morning. UPRO, these were all, see, now this one's beginning to look like a bear flag rolling over here. So I guess it all comes down to, this is the end of the week and America closes out the business week. That one's landing on here. Let's do this one. Plus 40.92. I don't know where it's going to open up. Well, it's going to open up lower, so that's fine. Just a marker. Let's leave a marker down there. FAS, banks and housing will be the last of this one. They're the ones who make the most amount of money here at the end game. Banks make it because we move into housing on that last leg up. Assets, blah blah blah, rising interest rates, yada yada yada. Like I said, the only thing is we're having a few months of issues here, housing and cars and now retail sales and stuff. So we're looking at it as a hiccup, but you have to be vigilant about what's happening here. And SDAO, I'm running out of volume on these guys. Basically the same type of deal here too, where I'm just putting markers down here for now that it's coming into areas that I'm interested in. So, and Brazil, not much of a pullback since it still has an open gap. 67% of gaps are filled. So, and higher interest rates affect other places. That one looks like a short here. What's this one? Energy shares, bear. So minus 1341. So minus what I'm doing here, 41, is I'm looking at this. This would be on the short side of things here. It basically came back. So this is how I kind of look at it. Is if I was going to do anything, this would be, I'd take the short side of this ERY here. But you'd go run over to the ERX, that kind of thing. What do you have? Gush and what's the other one on Gush? Okay, here's a bear market. Emerging markets. That one's bouncing up here too. All right, so kind of like the Titanic, it takes just a little bit of time for it to turn. How much time does it take to sink? All right, EDC emerging markets bull. Okay, so they swipe the bottom on the emerging markets here. So this thing gets back about halfway. I'd be looking to dump it too. What's this area here? 40. We'll just say we'll have a resting here at 85.41. It'll be a resting one just in case we get something today. We get a flurry of activity here, but you know, it's not just America; it's everywhere else. Just like in the early '80s, it was South America. Things of that nature here. This is a pretty good drop. There was nobody in here to buy. And ADX is turned up pretty harsh on here. So, like I said, I want to see some sort of short covering and stuff. It's Friday. America closes out the week. So we'll write the Sunday papers. That one kind of flubbed up. 20-year Treasury bear. I like that one on short puts, TMV. Short puts on that to add to longs on here. The 2s and 10 interest rates are basically pointing towards recession. Things are kind of flattening out the back end. We're raising the front end, but the back end is coming down. It's one of these things that we have all these baby boomers. There are a lot of, I'm kind of, the forecast is that we increase the U.S. population by 50% in the next 30 years. So that should keep our cycles going of homes and stuff. Basically I kind of look at, I'm following the economic game plan of after the Great Depression. The behavior's the same. Millennials are in tiny homes and, things of that nature. So their children are going to wake up and go, how come we don't have big, they'll see the big houses of the past and wonder why they live in a little one, when you can afford a bigger one. And that's basically, that's that Gen Z type of mentality kind of thing for what they're going to see. So we're going to have a clash again of the yuppie baby boomer type mentality versus their parents who went through depression. So Tech S, all those things. I mean, in this cycle, it's usually your over-the-counter and just take exactly what's happening in the crypto market. One side's technology, other side's speculation, and put that speculation in the over-the-counter and type stuff, and there you have it. We've had it all. We've had the pack rim thing in 1990. That was when we got on the Japan side of things in 90, and then we got into the China thing in 94, 5. And then we got nanotechnology, you name it. There's always been some sort of fad that comes through the marketplace, and now it's crypto coins. To me, it's, from what I've read, it's all it is just a tagging system. It's nothing more than RFID or, there's no. All it is it's just each individual thing has a, it's like an electronic bill of lading with a, it's really, what's it going to change? I mean, when I buy stock now, it doesn't go in my account. It goes in the street's name. It's, and here's the other one too, is you say you have a crypto on you have a contract on a ship full of grain. Well, that it doesn't change anything. The only thing that's certain is that, that code that you agreed to, you still have to have the product thing. And now we're back to, well, we're just going to move, like securities and all this other stuff. What about, short selling or naked short selling? How does that work? I mean, so it's a great idea. It keeps track of everything. It's, just like it's an improvement over RFID, but it's not going to be as rich as everybody thinks it's going to be, because that's going to have to be a fee, right? All you're doing is it's like you use your credit card. There's a code on there, and it tracks it. Same type of deal. This is just another quote unquote layer of protection. TMF. This one looks like I'd have to take a short side on this one. 21.55. What are we doing this morning in debt? We're down, so that one's I kind of got a little pokey on there. So it's going to be down here, but you get the idea. And I like the shorts. So we're looking at selling bonds this morning. What are we doing on stocks? We're up 2 on the S&P. Crude's up we're about 20 cents under 45. And gold's up to 46 or 56. It did get up to 58. So like I said, you took your and we're back to the beginning. Took your 500 and walked away. So here's 3 timers and stuff. So basically, like I said, I'd like to see the market open higher this morning and trail something off of these short. You saw with the kind of damage that happened to Tech L and SOX L. So that's going to happen to these other bullish ones too. So I'm looking at the bearish side of things here. That's it's just whatever the chart says. It's kind of like going into FOMC long debt. It worked. It's whatever the chart says. I don't care what anybody talks about. This is the truth right here on the chart. So everybody have yourself a wonderful weekend. And now to do the futures rundown in that